Welcome to my morning report analysis videos on Thursday the 29th of November with me, Rich Market Analyst at Hantec Markets. We've got a dollar negative move. There's been a turnaround in sentiment on the dollar after those comments from Jerome Powell last night. Is this the Powell put is the question that everyone's asking. Basically, Jerome Powell seemed to row back on previous comments that he said about how interest rates were quite a long way potentially away from being neutral. Well, he said yesterday that they were close to being neutral. Subsequently, the market has taken that perhaps they need to dial back on the number of rate hike expectations for 2019. And what we have seen is the dollar, which has corrected back. Euro jumped yesterday, even sterling jumped yesterday. Euro, dollar yen fell away. Gold price was higher. Equity markets, look at that, 2.9% on the S&P 500. What a jump that was. So we certainly seem to see that the dollar was under pressure, and we had a bearish engulfing candle or key one day reversal, bear key one day reversal on the dollar index. Still in this uptrend channel though, interestingly, hasn't yet broken down, but you look at yields, look at that 10-year yield falling sharply, back at 3% now. 2-year yield also falling away. Are these yields now rolling over? Certainly looks as though that the upside move on yields could well be at an end. So that's interesting to see. But certainly the dollar has corrected back, although not broken down yet. Look at this oil price. That has broken down. 49.65 on WTI. That's below $50 on oil. That is that's the lowest since October 2017, so coming up to a 13-14 month low there on oil, and it certainly seems as though this bear market shows no signs of stopping on oil at the moment. So yeah, generally speaking, dollar under pressure, gold higher, jump back above key pivot area. So that's a positive move. I'll talk about the implications of that in the chart analysis. Equity markets rebounding in Europe today, and oil lower. Now, in terms of data points today, we've had the European, some of the European countries coming out with growth numbers. Sweden in negative growth territories. Switzerland in negative growth territory, but also France actually came in line, but some of these Eurozone and European countries are starting to disappoint on their growth numbers. Focus today will be on core PCE, the Fed's preferred inflation measure. Core PCE expected to be 0.2% plus on the month, but on a year-on-year basis that is actually expected to come down from 2% to 1.9%. We're also looking at the pending home sales for the states. Housing data in the US has been terrible, or indicators have been falling away and disappointing in recent months. Pending home sales expected to grow by 0.5%. So new home sales yesterday, disappointed. So are the pending home sales going to do something about that? Now, we've also got Fed minutes tonight. Now, the question would be whether Powell's comments sort of mean that the Fed minutes last night fairly a moot point, really, you'd argue, but certainly there will still be some consideration given to the minutes at 7 o'clock this evening. So that takes me to my chart of the day, which is Euro Kiwi. Now, Euro Kiwi, interesting, has been under pressure. Bounced off that 65.55 level. Now, look at the importance of that. That is a huge level of support. Bounced off that, but broke on a closing basis yesterday. Not holding the break. I mean, it is basically around that level still. So you'd say that the market is still contemplating the breakdown. Today's intraday rally has been sold into, interestingly, as overhead supply starts to kick in. Got the 66.30 area, but look at that, 66.40, 66.50 coming in as a basis of resistance on a near-term basis of overhead supply. But certainly you'd say that breaking down on a closing basis below 65.50, that's a pretty big breakdown, and that would reopen or certainly at the moment you'd argue that would be a massive breakdown in terms of the longer term basis, because that is a key support broken over a year and would really start to generate contraction to the downside. Look how negative those momentum indicators are. MACD, stochastics, RSI, all rolling over again. So it doesn't look healthy in any way at all, this market, and failing at 67.90 is certainly a key level. A couple of negative candles in the last two sessions, consolidating a little bit today, but as I said, a close again below 65.55 would be a key level breakdown. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.